US oil prices have crashed to unprecedented lows. On Monday, crude oil futures collapsed below $0 for the first time in history, ending the day at a stunning minus $37.63 a barrel. On Tuesday, oil prices recovered some lost ground, but the gains were limited due to unresolved concerns about how the market can cope with an oversupply of crude.
But the fact that people are saying, hey, you can take this oil and I'll pay you to take this oil is really a sign of how much demand has started to just contract tremendously because of the pandemic.
The volatility in oil markets is negatively affecting stocks, with Asian and European indexes and US stock futures all in the red on Tuesday. The coronavirus pandemic has caused oil demand to evaporate so rapidly that the world is running out of room to store barrels that nobody wants. Storage at US oil hub Cushing has already grown to more than 15 million barrels in the past month and is expected to soon be at capacity for the first time ever. It's the delivery point for US West Texas Intermediate contract.
And the crude oil is backing up in the system so much that there's nowhere to put it. We're running out of places to put it here in the United States. So if you have storage, you can pretty much charge whatever you want at this point to enable someone to put their crude oil barrels into your storage.
The petroleum industry has emerged as one of the most vulnerable sectors hit by government shutdowns to limit the spread of coronavirus. Experts believe while Monday's negative West Texas Intermediate futures price may be temporary, it does confirm there is trouble ahead. OPEC is believed to be looking to cut oil output immediately, rather than waiting until next month to ease the pressure on price. Last week, OPEC and other large oil producers led by Russia approved a deal to cut output. OPEC Plus, a grouping including OPEC and allies, said it had agreed to cut output by 9.7 million barrels per day for May and June. According to OPEC Plus sources, the total global oil cuts could amount to more than 20 million barrels per day, or 20% of global supply, effective May 1st.
Frankly, I think there was some exuberance last week after the cut was announced, but clearly I think we see that evaporating yesterday. So from what it looks like, that is not enough, mainly because I think there is virtually no demand for oil in terms of transport, in terms of, I would say, economic activity, manufacturing activity in many countries.
The deal was made possible after US threatened to take measures against Saudi Arabia over its crude price war with Moscow. The US president had threatened Riyadh with oil tariffs and other measures if it did not fix the oil market's problem of oversupply. A group of 13 US senators from oil-producing states had warned Saudi Arabia that it would lose its lifeline on Capitol Hill and face anti-Saudi legislation flourishing if it did not agree to a cut. Disagreements between Saudi Arabia and Russia led to the collapse of a meeting of OPEC and its allies last month. But according to US media reports, Russia and Saudi Arabia had hoped to undercut American producers. The latest price fall could spell disaster for the US oil industry. Hundreds of US oil companies could go bankrupt because of extraordinary low prices.
These are unprecedented times. To bring financial aid from the US government to private oil companies has never been done before, nor has it been considered for that matter.
The key will be how long oil prices stay cheap. A rapid rebound in prices could allow many oil companies to avoid bankruptcy. But that's an unlikely scenario, given predictions of a long recession in the US, China, and other global giants.